And welcome back. Realtor.com released their latest housing market update today at the time of this video, which is the 29th of September. They released a weekly housing market update, and they provide stats regarding housing inventory, home prices, days on the market, and of course price reductions compared to 1 year ago. So in today's video, I'm going to share all the latest trends with you guys so you guys can be more informed. And with that said, let's go ahead and dive right in. This is according to Realtor.com that was just announced today at the time of this video, which again is the 29th. And just like my previous videos, I'm not going to share their analysis of the data. Instead, I'm going to share my own. So here's where you go to look at their data, which is Realtor.com/research/data. If you scroll down right here, click on this link right here, it takes you to more or less this download right here, which I have color coded and analyzed for you guys today, so you guys don't have to. Or if you do, let me know what you guys think. So let's first talk about median listing price. This is the median asking price for houses being listed for sale right now for the week ending September 24th of this year, of course. So right now we're seeing gains at 13.3% compared to the same week 1 year ago. In other words, the median asking price has increased by that amount. And this, of course, is above historical averages, which home prices tend to increase in the range of 3 to 6%, and of course, not 13%. And of course, these are only asking prices though, right? So these are not closed escrow prices. And that's why we're seeing a huge amount of price reductions right now, because a lot of home sellers have not received the memo that this housing market has slowed down. So here's some trends I want to share with you guys today though, because for home prices, again, 13.3% increase compared to 1 year ago, still high compared to historical averages, but much lower compared to around June of this year, where we saw gains in the range of 17% all the way up to almost 19%. Also, something you guys should be aware of as well, and I mention this quite often on the channel, is that in the second half of the year, every year, we have some seasonality of our housing market. In other words, our housing market tends to slow down in the second half of the year. We tend to see less new listings. Active listings tend to plateau or increase slightly. And also we either see a slight decrease in home prices or home prices plateau out. So it wouldn't be entirely unusual if we see home price gains on a year-over-year basis start to decrease in the months to come. All right, that's an update regarding home prices in the US right now. Let's talk about active listing inventory, which of course is housing supply. The total number of houses for sale right now. And as I've been reporting to you guys, over the past few months, we've been seeing this stagnation of inventory growth. So over the past 13 weeks now, the year-over-year increase of active listing inventory has been hovering around 25% to 30%. So housing inventory has not been increasing like we saw earlier this year. So the gains right now have been hovering around 15 to 30% over the past 3 months or so. And this is vastly different compared to May 7th, where we more or less had the same number of houses listed for sale compared to the same week 1 year ago. Also look at this, because for the first 2 months of this year, we actually saw decreases of housing supply compared to 1 year ago. So from January until the end of February, we saw decreases of active listing inventory down from 23% to approximately 30%. But that has completely reversed now, because ever since May 14th, we've been seeing more active listings compared to the same week 1 year ago. In other words, for the past 20 weeks, we've been seeing more houses for sale compared to last year. So one more thing I want to mention regarding housing supply in the US is that this gain of 29% compared to 2021 is in line with altosresearch.com as well, because right now they have reported that active listing count is at 557,000. 1 year ago, it was 432,000. So we have approximately 29% more houses for sale compared to 1 year ago, but more or less in line with 2020. However, though, far less than pre-COVID back in 2019, where we had about 955,000 houses for sale. Now we have just under 560,000. And going back to this data from Realtor.com, have a look at this, because as I've been mentioning in previous videos here, part of the reason why we're seeing a stagnation of inventory growth, in other words, inventory growth hovering around 25 to 30% on a year-over-year basis, is because we're not seeing enough new listings hitting the market. So over the past 12 weeks, we've been seeing fewer new listings hitting the market compared to the same time period in 2021. And because we're not seeing this huge increase of new listings, we're actually seeing just the opposite. We're seeing fewer new listings hitting the market. This is causing inventory gains to stagnate over the past 13 weeks. So for example, for the week ending September 24th, we saw a 9.5% decrease in the number of new listings compared to the same time period in 2021. And we've been seeing this trend for the past 12 weeks now, or past 12 weeks now. And this, of course, is causing inventory gains to level off. And as I note right here, part of the reason why we're seeing fewer new listings hitting the market for the past 12 weeks in a row now is because a lot of people have mortgages or mortgage rates of less than 3%. A lot of people have mortgage rates of less than 4%. So this de-incentivizes current homeowners right now because it doesn't give them a lot of motivation to sell their houses, given the fact they don't want to get rid of their very low mortgage rates, especially because mortgage rates are about 7% right now. On top of this, at a national level, our housing market has definitely slowed down, and in many markets, home prices have started to decrease. This again causes homeowners to stay put rather than listing their houses for sale. And let me give you guys a quick example here, because if I was to sell my house and buy the same price home, then my housing payment would go up more than double what I'm paying right now. This is simply because home prices and also more importantly, mortgage rates have absolutely skyrocketed this year. So there's many people like myself who have mortgage rates of less than 3%. Why would you sell given the fact that mortgage rates are at 7% right now? Of course, there's always going to be reasons why people sell their houses due to divorce, job relocation, if you want to rent instead, for example. But we're not going to be seeing this huge increase of new listings, in my opinion, because people have very low mortgage rates right now. Also, this decrease in the number of new listings is also seen by Redfin's data as well. So for the week ending, or actually for the 4 weeks ending September 25th, we saw a 13.6% decrease compared to the same time period in 2021. We actually been seeing fewer new listings compared to last year ever since the 4 weeks ending July 10th of this year. And this decrease ever since then is one of the main reasons why we're not seeing this huge increase of housing supply like we once did earlier this year. Even though we're not seeing enough houses being listed for sale right now, houses are still selling slower compared to 1 year ago. And this has been a similar occurrence over the past 9 weeks in a row now. So in other words, over the past 9 weeks, it's taking longer for home sellers to sell their houses compared to the same time period in 2021. Now this again is vastly different compared to the first half of this year, because look at this. From January 1st all the way until we hit May 28th, we saw houses selling quicker compared to 1 year ago by about a week to 2 weeks. So for the week ending January 1st, houses were selling 11 days faster compared to January 1st of 2021. And actually for the next 5 months, houses were selling faster compared to 1 year ago in the range from 7 days all the way up to 22 days. That all changed once we hit July 30th, where it's taking 1 day longer to sell a house compared to 1 year ago. And by the way, if you guys are still watching this video, thank you so much for your support. Also, please hit the like button if you are still watching this video. I greatly appreciate that. I'm also going to be sharing a summary at the end of this video here because this is, of course, a lot of data to share in today's video. But with that said, let's talk about price reductions. So this column right here is the number of price reductions compared to 1 year ago, or the percent change of price drops compared to 1 year ago. So for the week ending September 24th, we had a 79.3% increase in the number of price drops compared to the same week in 2021. This is obviously much higher compared to a year ago. I mean, almost an 80% increase in the number of price drops from 1 year ago. But this percentage right here is actually much smaller compared to mid-June all the way until mid-July, when the percent increase was in the range of 90% to 110%. Also, according to altosresearch.com, for the share of reduced price listings as of 9/23, the share is at 41%. So that means 4 of every 10 houses listed for sale right now have had price reductions. This is double the share from May 6th, when the share was approximately 20%. So at that time, only 20% of active listings had price reductions. Now it's 41%. And as I mentioned, I want to share a summary with you guys because that was a lot of info. So number one, inventory is still more compared to 1 year ago due to less home buying demand, but we're not seeing the growth of supply like we once did earlier this year. likely due to fewer new listings hitting the market for 12 consecutive weeks. Number 2, if inventory continues to stagnate or it declines and new listings continue to drop, that will likely soften the blow of this housing market slowdown. But as I mentioned right here, mortgage rates have been more or less at or above 6% every day in September, and this would likely slow down home buying demand further, causing inventory to increase in the weeks and months ahead. Therefore, because mortgage rates are at very elevated levels, especially compared to August 1st, when average rates were about 5.05%, also on January 1st, rates were about 3.3%. So because mortgage rates have been increasing so much, and they're currently around 7% right now, this should cause housing demand to decrease further in the months ahead. I'll definitely keep you posted regarding that though. And number 3, the number of reduced price listings is much higher compared to the prior year. We're up 79% compared to the same time period 1 year ago. And the share of price reductions is now double the share from 4.5 months ago. It was about 4.5 months ago, it was about 20%, now it's 41%. Also, the share of price reductions is far higher compared to the past few years as well. And lastly, number 4, houses are taking longer to sell compared to the same week 1 year ago for 9 consecutive weeks. Of course, this is a lagging indicator based on houses that actually have closed escrows or houses that actually have sold. And I expect days on the market to increase in the weeks and months ahead due to seasonality and also due to this recent spike in mortgage rates. And with that said, please comment below your biggest takeaways from today's video. Also, if you guys got any value out of this video whatsoever, then please hit the like button. I really appreciate that. Hope you guys have an awesome day. Look forward to seeing you on the next video.